Goldman said yesterday at a Wall Street conference that its bank trading unit has dropped 10% from prior year, led by declines in fixed income business. Whoa, nice breakdown of that. 471 would be something, huh? I still have a thesis that this is going to start to hurt. Bank of America, by the way, doesn't look like it, but it's just about ready to roll over, like nicely. And it has nothing to do with Buffett selling, although that helps. It is the fact that this is a lower high with a 10 and 21 about ready to roll over, with a very nice bearish expansion candle here, and we're just sitting underneath. So Bank of America short looks productive, and that Goldman comment I just read to you, but you know how I feel right now about the whole banking sector. I think we're gonna see the weakness. This has to break definitively. It hasn't even rolled over yet, but it's absolutely trying. This is absolutely trying. All right, so Goldman looks also terrible.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.LaDucTrading.com/club.
Oh, look at the banks going down. Hello, NYCB. Yeah. Okay, so we got some issues here. There's a fear right now, and it's taking down banks kind of hard. And we got KRE soft this morning, but that's not really the issue. It's NYCB is the issue, and ALLY is the issue, and that's bringing down some others. This is Tim's favorite non-US bank to short. Look at this. Tag your it, rejected. That's your short stop. In other words, don't let it get above 1667, about 1675, 17, whatever. This is a great setup for a rejection and a rollover, clearly. And that's why I'm excited about this, because it's exactly what I've been saying. JP Morgan warned much lower rates will hurt net interest income. It's just starting. This is just the initial knee-jerk reaction, just starting. So what did I say also in the past few weeks, months, literally, when we lose banks, tech will follow. Oh my, look at the regional short right here. Beautiful pattern. Schwab does not look good, but we knew that. Regionals don't look good, not a surprise. Global banks haven't busted the 10 and 21, but man, they're getting just more and more distributive. JP Morgan just admitting they used their inside voice and let the world know that lower interest rates are going to hurt NIM, net interest margin, which is exactly what I've been writing about for weeks and weeks. This is happening. So we need follow through, of course. But this is the structure I saw. Boom, you're it. Come back in, down. It's JP Morgan. It's heavily weighted in XLF. XLF has not broken trend. It just looks like it's ready to. You know how I feel. This is early. It's early, but bears watching. We only have shake and bake right now. Last week, we have work to do. We haven't fallen apart. We definitely had credit card services provider fall apart. Does not look like a safe bounce right there. Capital One has not rolled over. Visa and MasterCard are just sneezing. That's all they're doing right now. Just it's a little hiccup. JP Morgan, of course, is the reason that we're having such success in the XLF short. But my point is the weakest banks, Bank of America looks like it's rolling over with a 10 and 21. Lots of shares sold by Buffett. Okay. We know Wells Fargo is always very, very poor bet to move higher. I would say the Citibank short is probably the highest conviction, and Schwab, that just looks terrible. So Schwab and Citibank look terrible. And then I would say Goldman is a great tool to short. They just admitted, their trading profits are 10% loss year to date relative to last year, but they're also all in this kind of major bank weakness. And don't forget insurance. I think that's the next kind of shoe to drop. What I was very excited about was the bank rollover because we timed that so well. This is that trend line last week, and I said I really, really hate to recommend shorting all-time highs. I think banks are gonna roll over. This was a great candle, reversal candle. We're inside the trend line. We're breaking 44.11. I really like this one a lot. Deutsche Bank, and literally this couldn't have been better, right? We came right up here to 1667, and I said that's your go short, right? So if it gets above, you're wrong. In other words, go short means low risk entry. Your low risk entry always, if you have a really, really strong resistance level right above, that's where it needs to stay below. So, hey, if you're wrong, okay, that's where it gets closed out. For an example, I do like that one. I am bearish Citibank. Now, this is a bigger theme. This is a more overarching theme. This is a big worry kind of theme. So, you know what really, really has to stay below this 61.67 monthly. It's key. That is a gorgeous reversal trigger. We're right on 50. It should do a little squiggling here, but this looks really shortable, really, really shortable. My point is they're coming back in for a test. It's a 21 test. There's the 21 test. It cut through the 21, went to the 30. Now it's back to the 21. We could have a little bounce before the next 30 and 50, but this is where I see it. I see them coming back down into the 50 week. That was a massive candle yesterday, and there were reasons for it, by the way. So there were actually some really good reasons for it. Remember yesterday when we were seeing it live, it was one of those deals where JP Morgan had come in and said, guess what? Net interest income is going to be lower. It's under pressure. That was a big deal. That's exactly when it tanked. Exactly. At the same time, generally speaking, we had Goldman Sachs CEO noting that Q3 trading revenue is tracking towards a 10% decline due to more challenging fixed income. And then we had Ally, which was the car lending leader, said credit challenges have intensified. It was a perfect storm. But the big one to me was JP Morgan, because I've been writing about how falling yields, and they specifically said falling yields will hurt net interest income. That I knew that was it. So it wasn't about the equity tier 1 capital requirements. Instead of 19%, it was 9%. That's a benefit. That should have been a positive when Barr came out at 10 o'clock, but the news was already released. No, it was absolutely, in my humble opinion, JP Morgan saying lower interest rates are going to hurt net interest income. So I'm sticking with that. And I didn't even know about this one. Repayment stress in face of higher interest rates. JP Morgan noted credit card revolving balances are roughly 25% higher than they were pre-pandemic. I still think this is going to be a very kind of decisive moment here in a few months when banks and tech is hurting. Morgan Stanley to the 200-day, I would say 90. Goldman, we already did this. This was gorgeous yesterday. Like catching that real time was stunning, where they literally said we're not gonna make our yearly, we're actually 10% lower on volumes and the rest. It is continuing. I mean, these are the gorgeous options too. So just remember, you've got a 10 and 21 that looks like it's gonna roll over. And as far as a price target for your Goldman short, see the low of this candle? That's where it's going. And then we'll probably have a little bounce and then head down to 421 area. Very nice. It should not do it all in one candle. That would be ridiculous. But it took 3 days because we had a yen carry trade unwind. This can take a little bit of while. Look at this. Gorgeous. Bounce into resistance. Break. Bollinger Band is opening up. There's your 100-day. Nasty. Didn't even bounce on the 100-day. Of course it's bearish. I'm just saying pace yourself a little bit because it is likely to have a little bounce and then trounce and then bounce and then trounce. It should. All right. This is a little stabilization for JP Morgan. If you chased that short, this was resistance. I warned, careful. It came back in and it definitely had follow through. This is an area of some support, but this is definitely 201. In other words, it might be a little excessive on the downside for today. Might have a little bounce, but the rest, honestly, they are just coming right back in, breaking down across the board. They look awful. Remember Bank of America? I know we talked about this. It wasn't just Buffett. It was this massive bearish engulfing that just took out prior weeks, especially breaking down below a monthly. Very important. So anything below this kind of 40 area is bearish. And sure enough, boom, big old head and shoulder fashioning on Bank of America. And it looks like it's about ready to open up the Bollinger Band. So we're making lower lows. Even if we bounce, it likely gets rejected. Banks are now starting to roll over. I've been waiting for that one, right? When banks and tech are rolled over, why buy anything else? Guess what? XLU is going to see some profit taking. XLP XLV, they're all going to see profit taking. I warned, this is exactly what I warned about. If you lose banks, why, and you've already lost tech, why buy anything else? It's my saying of, in lieu of sector rotation, there will be volatility. We had banks, and they were the one thing that everyone was kind of holding on to. We're going to be fine. We're going to rally because banks are holding up, and now they're not holding up for all the reasons I gave you this morning.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.